Thanks,
Now
Dirk.
we're joined by Jim Rickards. He's the author of the book, The Road to Ruin. He's the chief global strategist at Meraglim. Is that how you pronounce it?
That's right.
Meraglim.
Meraglim, yep.
You're a super bear, aren't you?
I am a super bear based on, I think earnings next year are going to be very disappointing. 2017, you had double-digit year-over-year earnings increases, but that's because 2016 was such a lousy year. You're working off a weak base. Earnings today are not much better than they were the year before. So Wall Street just extrapolates that, but there's no basis for that. The economy's slowing down. We have disinflation. So that's one thing. Then there's...
Wait, Jim Rickards. Wait a second here. I know your wife's listening to this on satellite radio. What's her name, by the way?
Anne.
Anne? Look, the man's all right here, but, you know, on the stock market, I've got some problems here. Now, you say that profits next year are not going to be as good as expected.
Correct.
Therefore, the market goes down.
Well, on a valuation basis, sure.
Okay, how much does it go down? If you're right on profits, how much does the market go down?
Well, we're set up for a 10% correction. By the way, we've had two in the last couple of years, August 2015, January 2016. I'm not talking about the end of the world or an apocalypse.
Oh, you see, I was putting in that camp, and you're not in that camp.
Well, I'm also in that camp. There are two problems. One is normal business cycle, recession, correction. That's in the cards. Beyond that, we're talking about systemic risk, something like 2008 or worse. That could happen tomorrow or 3 years from now or 4 years from now. That has to do with the complex dynamics of the capital markets, which is the right model for understanding it.
So would your advice to our viewers right now be lighten up on stocks, sell half your holdings, something like that? Is that what you say?
Sure. You know, like the euro, gold, lighten up on stocks, increase the cash allocation. By the way, your prior guest, with all due respect, Gary Cohn, this whole business of, this wave of offshore earnings coming back and helping the economy is complete nonsense. First of all, the money's already here. If you're an Irish subsidiary of Apple, you can invest on a portfolio basis. This has been true since the Johnson administration in the late 60s. You can buy treasury notes, stocks, et cetera, to your heart's content. That's not doing business in the U.S. So the money is already here. Do you think it's in $100 bills in a vault in Dublin? No. They invest in U.S. markets, and that's okay. You're not taxed. If Apple wanted to build a factory in the U.S., you don't think they could finance it for 10 years at 2%? No, the decision.
They did.
Right, that's the point. The decision to build factories is independent of the repatriation, and the repatriation, the money's already here on a passive basis. So this will do nothing for the U.S. economy. It's very good for corporations, because if I accrue taxes at 35% and you tell me it's 20 or whatever, I can reverse the accrual and run it through the income statement.
Repatriation would be good for the stock price, though. I take your point in the economy.
Good for the wealthy,
good
good for the rich, good for stock prices, good for corporations, not good for the economy. Does nothing for the economy.
Okay, Anne, if you're listening, he might come back. He's the author of the book, The Road to Ruin. He may be back. We'll see. Jim, thank you very much.
Thank you, sir.
Seriously, thank you very much.
Thank you.